So this is a question from a YouTube commenter with the interesting handle @SpartacusForLife1508. Hello, Spartacus. Spartacus asks, if banks are again profiting from economic misery, then isn't it time the government created its own high street bank dealing in mortgages and small loans at competitive prices? The profits go straight to the exchequer. Isn't this logical?
Thank you, Spartacus. All our listeners are Spartacus. I mean, let's talk about the context for this question, first of all. So inflation has actually fallen by more than it was expected to. Mm-hmm. People's borrowing rates are going up. So why aren't banks passing this on to savers, for one thing? And would this potential solution that's being mooted by Spartacus help?
There are some very good rates out there that are higher than bank rate, but they're often on accounts where you can only put in maybe 300 or 400 quid a month, and you get that interest paid at the end of the year. And it's, that's not particularly useful to, for example, a retiree with a pot of money that they're using for their retirement. That may be in the tens of thousands of pounds. That they want to move somewhere where they can get a decent return. So there is plenty of evidence that high street banks are making a good chunk of money out of the difference between what they are charging borrowers and what they're paying to their savers. So Natwest's first quarter results, so that's how much money they made in the first 3 months this year, their net interest income, which is that difference between what they charge borrowers, what they pay savers, that's gone up by £875 million on the same period the previous year. Mm-hmm. So it's 43% increase. So net interest income is like most of their total income. It's like 75%. So that's pushed their operating profit up by about 700 million quid. There are very good reasons to ask why they're not handing more of that money to their savers. So a very good question for Spartacus to be asking. But
Wolf's going to defend the banks.
I just love banks. So first of all, you kind of do already bank with the government. So your money in your bank account is protected up to 85 grand per person, per institution by the Financial Services Compensation Scheme. If you have a pension, most of it is probably in gilts, which government bonds. So, you're an investor in the government already. Congratulations. So you are already banking with the government to a certain extent through these means. For the government to then set up its own bank would be a really, really big investment. So it costs about 7.8 billion a year to run NatWest. So, they're making a decent bit of profit, but it's also a very significant expense. And that would be, to set up a NatWest would, be a very, very large amount of money. And to get the Bank of England to do that would also be very tricky. You'd have to hire thousands, if not tens of thousands of people. It'd be a huge investment at a time when there's lots of borrowing to be done to pay for other stuff. So what would probably happen is it would probably be contracted out to somebody, and government contracting sometimes doesn't go that well. Sometimes it leads to absolute disasters. Sometimes it's just hugely expensive. Although it's a nice idea, part of it, the important part, protecting the money you actually have, is kind of already taken care of, and the other bit would be so expensive that it was basically impossible in the current economy.
So is there any alternative where we could get a bit more help from the state with our transactions?
There are people at the Bank of England who think that there is a way around this, which is to have a central bank digital currency. So you have a new kind of digital pound or a brick coin. That is a new way of facilitating some like digital transactions, which gives people kind of a sort of a state-provided money that they use, because most of the money in our economy is created privately. It's private credit creation by high street banks. So this would go back to more sort of government credit creation or central bank credit creation, and that would mean that people were banking with a kind of account with the Bank of England. But it wouldn't necessarily be more competitive in terms of the rates you would get on savings and mortgages and things like that, because a lot of those are still funded by selling debt to international markets. So if you're still selling bonds to fund it, then it depends what other people will pay for those. So it wouldn't necessarily get you a much cheaper mortgage or anything like that. And again, it would come with a load of problems, like people aren't sure about what that would mean for your privacy. It could come with a whole load of technical issues that would need ironing out. And again, you would probably get somebody else to do it, and that would probably be, a high street bank. So you'd be back to square one.
And the government bails out banks when they fail anyway.
Yeah. I mean,
so it's sort of a bit of a moot.
Yeah, the government is still the largest shareholder in NatWest. So if you want to bank with the government,
you already are. Congratulations. What could the potential solution be to this sort of rip-off bank behaviour then? Is it just tighter regulation? The FCA are imposing a new consumer duty. I think it's called at the end of this month. Could that help?
Yes, I think it will. It's a regulatory question for the FCA and potentially the Competition and Markets Authority as well. In a lot of cases, sort of the other areas in which so-called greedflation or profit-led inflation has cropped up, where it's really identifiable, such as petrol prices, actually, the more people talk about it, so the more government acknowledges it and regulators say, we are going to look at this, that does tend to lead to a fairly quick turnaround in prices, because you don't want to be ASDA being called up in front of a select committee and having to explain why your margin on petrol has trebled, because that gets people like me mentioning it on podcasts like this. People go, I might go to another supermarket's petrol station. And similarly, you don't want to be the bank that is singled out for the biggest net interest income figure in front of the Treasury Select Committee. That the threat of regulatory intervention is probably the most effective thing.
What about, as has occasionally been suggested, a windfall tax on banks, in the same way that there was a windfall tax on energy companies? This idea that if you're making supersonic profits because of the economic misery of millions of people, that's fine. We're not going to stop you doing it, but we are going to tax you for it. Is that possible? Is that likely?
So I'll go from defending banks to defending fossil fuel companies. I love them as well. But in a way, like, fossil fuel companies couldn't really help making those extra profits because they sell a globally traded commodity. So the price of that commodity went up, and so that's what caused them to make those excess profits. But they also sell a globally traded commodity that kind of belongs to all of us because it's comes out of the ground, so there is a very clear rationale for a windfall tax on those. This is more market led and possibly a little bit harder to justify. But again, the threat of looking at it, the threat of possibly doing so, might be enough to have people sort of move the numbers a bit, offer some more products, just tell consumers where they are in line for a better deal if they just made a sort of a quick switch, which is very, very easy and possible to do now. So it's something to talk about, but it might not be something that necessarily had to materialise in order for some positive change to result.
I was going to say that one of the biggest problems I would see with creating a bank would be, it's like a cultural problem. Would taxpayers really be keen for their taxes to go to ultimately the banking sector? That's a really, really hard sell after 2008, I think.
Yeah, that's a good point. Yeah. And on the flip side, I mean, this is what I always hear in focus groups and things. People think the government is bad at spending money.
It's bad at borrowing money. We've got the highest proportion of inflation-linked debt of all advanced economies, which the OBR report said last week. Yeah. So why do people think we'd be good at lending? I
actually think that the question and the way it's being asked is really interesting. So we've just explained, Will has just explained perfectly why it wouldn't work. But I think the question, the fact that people are thinking about this and talking about it really speaks to the fact that maybe since COVID, there's this sense that, like, why can't the government step in and fix it? And if the banks aren't providing you with a decent mortgage rate or interest rates on your savings, why can't the government do something about it? And if the supermarkets aren't passing on the drop in wholesale costs to consumers, why doesn't the government step in? Why doesn't the government step in on energy? And I think, you know, that's really justifiable when you look at all the different parts of the country that are falling apart. But I think it is a change in mindset of something has gone wrong. Can the government please do something about it? And I don't think you'd have got a question like that maybe 5 years ago.
Yeah, I mean, this is why I think the government is so keen to always say, oh, we're getting the supermarkets in, we're getting the mortgage lenders in. You know, they want to look like they're doing something to try and influence the way these markets are working, even though they don't quite want to make that official sort of intervention like they were doing so often in the pandemic.
I think there's like some responsibility on consumers as well. Like, people can vote with their feet. They can use their credit union more. You know, there are things that people can do that, you know, might stave off some of their frustration in future.
Yeah, that's right. I mean, there are sort of community banks and credit unions and things like that are for Spartacus, you know, things to look at for a more sort of egalitarian way of banking.
Yeah. Okay. Well, thanks to everyone who submitted questions. They're really good ones. We do read them all, so please keep them coming in. If you'd like to send us a question, just go to newstatesman.com/youaskus. Or if you're watching on YouTube, you can just leave a comment under the video. Thanks so much for watching. We'd love to know what you think. Please make sure you leave your comments below. And if you enjoyed watching this podcast, you can watch more of our videos on our YouTube channel. And don't forget to like and subscribe.